In just 1 week, US spot Bitcoin ETFs pulled in a staggering $1.8 billion in net inflows. That's no accident. It's a strong signal that institutional investors are getting serious about Bitcoin. And this isn't just a one-day spike either. These funds saw net inflows for 4 days straight, showing real momentum. So, what does it all mean? Bitcoin is no longer just a niche play, it's becoming a regular fixture in mainstream investment portfolios. Since their approval in January 2024, spot Bitcoin ETFs have flung the doors wide open, and the money is pouring in. So, where's all this money coming from? A lot of it is flowing into BlackRock's iShares Bitcoin Trust, IBIT, and Fidelity's Wise Origin Bitcoin Fund, FBTC. These aren't crypto startups. They're giants in traditional finance, managing trillions. That's a big deal. It means the buyers aren't just retail traders or crypto diehards. We're talking pension funds, hedge funds, and even traditionally conservative asset managers. Why the shift? Because Bitcoin isn't seen as just some speculative gamble anymore. It's starting to earn its place as a serious asset, a hedge against macro risks, a digital store of value, and even a rival to gold. With inflation worries still hanging over the market and uncertainty around the Fed's next move, investors are looking for new ways to protect and grow their money. For more and more of them, Bitcoin is becoming that option. When money flows into ETFs, the underlying asset feels it, and Bitcoin is no exception. Yes, the price moved up, but that's just the tip of the iceberg. Under the surface, things are getting interesting. Liquidity is improving, derivatives markets are heating up, and long-term holders are stepping in. On-chain data backs it up. We're seeing more accumulation and fewer coins sitting on exchanges. That's typically a sign investors are planning to hold, not sell. This isn't just hype or another retail-driven frenzy. This wave feels different. It's being powered by real, fundamental demand from serious players. And this isn't just a US story. The world is paying close attention. Hong Kong has already approved its own spot Bitcoin and Ethereum ETFs, and they're starting to attract capital. In Europe, regulators are gradually warming up to crypto, and countries like South Korea and the UAE are actively laying the groundwork for ETF adoption. When global markets see the US opening the doors to crypto, the pressure to keep up becomes hard to ignore. We could be at the start of a global wave, a coordinated move toward mainstream crypto ETF adoption. If that happens, we're not just talking billions, we're talking trillions in potential inflows over the coming years. If $1.8 billion can make such an impact in just 1 week, imagine what sustained institutional capital could do. Some analysts suggest that even if just 1% of global pension assets flow into Bitcoin, we could see prices hit 6 figures. But with big opportunities come big risks. Volatility, regulation, macroeconomic shifts, and changes in market structure are all potential curveballs. That said, one thing is clear. Bitcoin is maturing, and Wall Street is paying attention. The next wave of adoption won't come from retail traders. It will be driven by institutional investors, the suits, the spreadsheets, and the long-term players who are in it for the bigger picture. So, the real question isn't, will Bitcoin survive? It's, how big can Bitcoin actually become?